Good afternoon from Hong Kong. My name is Aidan Gregory, Senior Correspondent at InsuranceAsia News. I'm joined today by Teruki Morinaga, Director for Insurance at Fitch Ratings in Japan. Welcome to the show, Teruki.
Hi, Aiden. Thank you for inviting me. I'm happy to answer any question on Japanese insurance coverage today. Thank you.
It's certainly a pivotal time at the moment for Japan's insurance sector and the country's capital markets more broadly. What's your outlook for the Japanese insurance sector this year?
Thank you. Our outlook on Japanese insurance sector for 2026 is neutral, and most of our coverage, the insurance companies' outlook are also stable. However, it is neutral, but rather closer to improving. So precisely speaking, the outlook would be neutral, but between improving and neutral. That's our understanding at the moment. And as you mentioned, the result announcement show that the Japanese non-life insurers and also life insurers result turned out to be very good so far in the financial year ending March 2026. So in terms of life insurance, over the medium to long term, the underwriting profits are likely to peak out within the next 5 to 10 years because of continuously and gradually contracting Japanese population. However, we think it will take some time. And meanwhile, the investment income at the Japanese life insurers are actually steadily growing because the environment expected to continue to be favorable for Japanese life insurers. And plus, their foreign subsidiaries, especially US life insurance subsidiaries, are healthily growing. So overall, the credit fundamentals we expect continue to be quite healthy. And in terms of non-life insurers, the situation is even better in that the domestic non-life insurance suffered from low profitability until several years ago, but actually supported by the Japanese inflationary environment. Japanese non-life insurers continue to raise premium rate, continuously. So as a result, their profitability is improving substantially. And also, because of the recommendation or pressure from the regulator, Japanese non-life companies are selling out their strategic domestic equity holdings, and that resulted in the better capital adequacy and also the realized profits by selling out. Plus, similar to life insurers, Japanese non-life insurers, foreign subsidiaries, especially US subsidiaries, are growing quite healthily, strongly. So overall, Japanese non-life insurers fundamentals, I would say, expected to be even healthier, even stronger compared to Japanese major life insurance companies.
Well, one of the striking things in the recent round of results, was the notable absence of any kind of major large nat cat losses in Japan or or in the international businesses. Certainly that that is a massive bonus in terms of enhancing the profitability of the sector.
Yeah, that's true. So actually, Japanese non-life companies are actually restraining their underwriting natural catastrophe risks outside Japan. So that doesn't surprise me. But in terms of Japanese catastrophe risk, in a sense, they are lucky last year and this year because, as you mentioned, there have been no major catastrophe, this year and last year so far. But even if somewhat big natural catastrophe happens in Japan, and the Japanese non-life companies' portfolios are now much more diversified, globally. So I think the negative impact will become more manageable one compared to 10 years ago or 20 years ago. Yeah.
And of course, given the regulatory changes surrounding cross holdings and the fact that many Japan's insurers are sitting on basically a mountain of dry powder that can be that has to be redeployed somewhere. Do you expect that Japan's insurers will continue their wave of outbound M&A in 2026?
From the standpoint of Japanese major life insurers and non-life insurers, in order to maintain their top tier player status in the world, they have to go abroad. And also in order to seek growth, because the growth rate in Japan is lower than most other markets, Japanese insurers, both non-life insurers and life insurers, have been quite successful in their acquisition in the US market. So we expect they will continue to go overseas, especially in the US market for some time.
Do you expect that? You expect that to continue, or do you will we start to see more of that capital being directed in towards other high growth regions like Southeast Asia, for example, or India, which has just liberalized its foreign ownership regime?
That's actually a good question, and actually our answer is for some time the main target will remain US market, for sure, because again US is the biggest and most transparent market. So, and the success rate of Japanese insurers are quite high or almost highest. Japanese insurers will continue to get sizable profits instantly. However, even the US market, the prominent importance may decline in the future. In the future means several decades later. So Japanese companies are managing their strategies not only a couple of years time horizon, but also a couple of decades time horizon. So in terms of buying a sort of a real option, Japanese companies are also investing in high growth emerging markets, and also even UK and European market as well for the diversification standpoint. And so in terms of emerging market, it is clear that it's more difficult market. So you may fail in penetrating in the market, and also the market may not grow as expected. So some investment may fail eventually, but if some of the investment turn out to be successful, that would be a big one in the 20 years or 30 years later. That's what Japanese major insurance group are thinking. And actually already some emerging market investments turn out to be successful. For example, in life insurance area, Dai-ichi Life's investment in Vietnam, Dai-ichi Life's Vietnamese subsidiary, turned out to be quite successful. So that's a model case in Southeast Asia, and also for non-life sector, Tokio Marine's Brazilian non-life businesses turned out to be quite successful recently.
As the sector prepares to transition to the new risk-based capital regime in March, how well prepared are Japan's insurers for this change, and do you still see there being quite a significant pipeline of reinsurance transactions to come?
Okay, so your first questions, actually, some companies already announced the ESR, the solvency ratio calculated by the methodology of the new regime, but many companies do not disclose the exact figures yet. In terms of the Fitch Ratings coverage, almost all, I would say, all of the companies, already have a sufficient capital buffer, so they will announce the good ESR score in mid-May or late May. So we have no concern or no worry, in terms of our coverage. However, in the small companies and also in subsidiaries of some subsidiaries of foreign companies, foreign parents, may announce the weak numbers in this May. So we need to check whether all of the Japan registered companies will announce the good numbers or not. And for your second questions, so in terms of the weekly capitalized companies, the asset intensive reinsurance will continue to be option. And also, even relatively strongly capitalized companies, if they want to strengthen the saving type products, I mean capital heavy products, then to use asset intensive reinsurance will surely be a good option. So I expect the asset intensive reinsurance transaction will continue this year. However, we actually monitoring the situation relatively in a cautious manner because, as you mentioned, the most reinsurers are subsidiaries of private equity companies or hedge funds. But as you know, recently, the risk from private credit is focused by some market participants, and we also have some concern. Yeah, and as of now, we don't see clear deterioration in private credit markets in their portfolios. I mean, the reinsurance companies which deal with asset intensive reinsurance tend to invest in those areas. So so the asset risk or investment risk in these high risk credit area we were concerned if the asset intensive reinsurance usage will increase in Japan going forward.
And it's been really interesting listening to your answers, Teruki. So thanks very much for joining us.
Sure. Yeah, please keep in touch. Thank you.